Gold's price has rocketed past $2,600 per ounce, an all-time high. This rally seems unrelenting, fueled by global economic and geopolitical factors. In this video, we explore why gold is surging and how it compares to other asset classes like bonds, equities, and commodities. The Fed surprised markets by cutting interest rates despite robust economic growth and persistent inflation. A key driver behind gold's rise is the increasing fear of inflation. Gold, often seen as a hedge against inflation, becomes more attractive as traditional assets, like bonds, offer diminishing real returns. Gold's price surged past $2,600 per ounce, up 1.71% last week. The US dollar index fell by 0.39%, reflecting currency weakness. Inflation, measured through the PCE price index, is expected to show a 0.1% monthly rise and a 0.2% increase in the core index, pushing year-on-year core inflation to 2.7%. The 2s10s Treasury curve steepened last week, a sign of rising long-term yields, which typically would dampen demand for gold. However, the precious metal continued to climb. This divergence may signal that gold is absorbing some of the inflationary risks that bonds have not fully priced in. Yields rose across the bond market, but the disconnect between gold's rally and rising yields suggests broader market inefficiency or deeper concerns about currency devaluation. European Central Bank President Christine Lagarde's warning about inflation echoes concerns of central banks tolerating inflation over deflation. Her comparison to the 1920s deflation era suggests that inflation might be seen as the lesser evil, further supporting the bullish case for gold. Ongoing production cuts by OPEC Plus sparked a 4% rise in crude oil, hinting at a potential inflationary theme across commodity markets. The Bloomberg Commodity Index has risen in 9 of the past 10 sessions, indicating that inflation expectations are becoming more embedded in market sentiment. The Reserve Bank of Australia faces political pressure to keep rates low despite its tough stance on inflation. This theme of political interference in monetary policy is seen worldwide, from Australia to the United States. Gold prices often benefit from such political uncertainty, as investors seek assets that are less vulnerable to governmental control. Despite a strong August employment report, the markets are pricing in a 66% chance of a rate cut by December. This skepticism of central banks sticking to their hawkish rhetoric reinforces demand for gold as a safe haven. Gold's remarkable rally past $2,600 reflects a complex blend of inflation fears, geopolitical tensions, and central bank actions. As the global economy remains uncertain, the yellow metal stands out as a safe harbor for investors. With inflation continuing to loom large, gold may be on a long-term upward trajectory.